Happy Monday, traders. It's 8:03 a.m. Chicago time on the 6th of May, 2019. Can I get a mic check? Is it running hot again? Can't tell. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off. The market has dropped quite a bit overnight. Overnight on news, on tweets from POTUS stating that he's ready to apply a 25% tariff on Chinese goods based on the fact that the talks are not moving quickly. The negotiations are not making any headway. So in case you're wondering what is going on here, that's where it comes from. So Donald Trump threatens to raise tariffs on all Chinese imports to 25%, sharply increasing pressure on Beijing to make concessions in a make-or-break round of trade negotiations slated for this week. Premier Liu announced that he might cancel his trip to Washington today or this week as a result of this threat that was put out on Twitter. So that's causing jitters in the market because we rallied on the basis that because Kudlow and others have said that negotiations are going really well. And that they're probably going to come to an agreement soon, and they just threw a wrench in it. This is why on Friday I was saying that I would not carry risk into the weekend. These kinds of things are quite common. It just happens very, very often that we approach the high and we sell right off, and that's what we saw. I did mention that last week, that new highs, we didn't make new highs. We have a triple top now at the high. But once we get up there, we generally sell off, and we've had about a 60 or 70 point sell off from up there. So that's how things work. So what's leading today? The bonds are up 21 ticks. The 10-year notes 13.5 ticks. The dollar's up 18 cents, and volatility is up to almost 16. The NASDAQ is really taking it on the chin, 156 points down or 2%. The Dow is down at 491 points currently. And this after a market has recovered a little bit. The DAX is down 206 points and the S&P 500 down 47.5 points, a pretty big gap. The S&P is trading around the century figure at 2,900. This is likely to be a very interesting day. Not only because we're gapping and there's a really high volume versus historical norms. So far today, the E-minis overnight have 571,000 contracts already. 571,000 contracts. That is, contrast that to the historical expected value of about 110,000 and the recent norm, which is about 150 to 160,000. This is going to be an active session. Pay attention. On top of that, the micros launched last night. A really excellent launch. I really expected it to be much more erratic and much more displaced. It just so happens that the micros launch on one of the biggest gaps down in a while. But overall, the market makers have kept it in line. The volume so far, just for a frame of reference, the volume so far on the MES, the micro ES, is 18,240 versus 575,000. Last night when I went to bed, the MES only had about 1.4%. 1.4%, and it currently has 18 over 575. It has 3%. It has doubled The MES is very, very active. 18,000 on a launch. That is outstanding for a futures product launch. I would call this a very successful launch. The NQ has been very interested. The MNQ has traded really, really well. Has traded 5,450 contracts versus 184,000. Also very, very much in line. The laggard on the micros is the Russell, as more people pile into the MES and so on. Many, many brokers, if you're a Convergent member, you should have received an alert email yesterday. Many brokers do not have access to live trading on these micros and will not until sometime today, because conformance testing and safety checks have to be made on the live feed. Pretty much everyone has it on demo, but on live, many direct access platforms do not provide access to the micros until sometime later today. Just know this. There's no need to call your broker to find out why you don't have it. In general, conformance testing could not take place until the product opened, and it opened at 6 p.m. Eastern last night, and crews have been working on doing that, doing those checks. I would prefer that a clearing firm is responsible enough to make sure that they do checks against their risk check systems and the quality of the servers and so forth, and take their time in releasing it than to just make it available and then cause all kinds of problems. In case you're not caught up, the release of the micros is truly, I feel, I hate to say it, but I feel like I'm vindicated. I've been fighting for these for quite some time. Since about 2012, I've been pushing for these, and they are here, and I'm really, really happy. So that's this morning. Again, risk off so far. The bottom in the overnight session was 28.83.50 in the ES, and the top after the low was put in is 29.0475. Again, we are struggling with the century figure, and we stand to open right here. We'll go over the review in a minute. As far as what could interrupt our auction, in addition to tweets, and by the way, if you don't have a news feed, really, really a disadvantage not to have a news feed in this environment. All Convergent members get Trade the News, the full Trade the News service for futures FX as part of their membership. It's $185 value that's included. And it's just at any point in the day. Today, we could hear from China. We could hear more from POTUS. It's pretty crazy, but the market's news-driven, has been since 2008. And I feel like without a news feed, which I've never traded without one, without a news feed, you're just blind. No, you cannot trade the news and get ahead of the news, whether it's a planned release, economic release, or some other news event. However, the important part about the news is that the extent of what makes the move happen gives us an idea of whether or not we should expect a reversion to the scene of the crime, or if it's something that's likely to hold. Today, the expectation is that the market is likely to test down as long as it stays above 28.91 in the ES. I'm expecting it to continue to drift higher and revert back. Again, this is a news-based move. Both countries really cannot go without a trade agreement. So it's just a matter. This is not much more than posturing, to be honest. And that's what I expect it to be. So looking at, on the calendar and what could interrupt our auction today, we do have some central bank speakers. So we had Fed's Harker. We have Fed's Harker right at the open. We have ECB's Prayet at 11 Eastern. But other than that, the calendar is clear until the balance of trade number comes out for Australia. That's at 9:30 Eastern. The rest of the week looks pretty decent. We get some really key numbers out of China. tomorrow evening at about 11 p.m. Eastern, the U.S.-China talks resume, hopefully. And then on Wednesday, we get the inflation rate from China at about 9:30 Eastern. And then Thursday, we do get a couple of U.S. numbers. But really, all in all, Friday is the day that has the key numbers. It's a very, very quiet week for most of the week this week, okay? A quick look. Let's take a review of what we expected on Friday. The primary scenario on Friday, we were opening on the upper end of the range of Thursday. The primary scenarios were likely to push the overnight high, which was at 29.34. Remember, 29.34, 35, really important area. Expected that to be pushed, and then I expected a dip down into 25 or so before the market bounces back up. The secondary scenario is a responsive sell spree down to 29.21 to finish higher. The third scenario is a quick dip into the prior range, 29.30 or so, and then a rally towards 29.50. Okay, it looks like scenario 3 played out. Here's what we got. So this is pretty much scenario 3. We open up, dip into 31 and a quarter, and we push. Remember, the target for scenario 3 was 50, pushed into 49, missed that by 3 ticks. The way the market finished on Friday, point of control near the upper distribution of the range, double distribution profile with some really crumbs in between. And this was geared without this China trade news that came in last night. This was geared for a further push back into 56. 56 is now key again. It's a triple top. It's an inter-day, meaning it's a double top between 2 days, and then we had a double top inside of the day on May 1st. So this was really set up for migration north. So if this had been, if we had finished Thursday afternoon this way, the way Friday finished, we would have seen a higher high into Friday Globex before the news came out. But the news came out before the market opened, so the market opened and splashed down immediately. The overnight high is way down here in the ES, 29.1775, and that was put in right at the open, and we were not able to make it back. The best we could do on the comeback is 29.0475 once the low was put in overnight. So we are trading way down here. This is where we are currently. This is what we left behind. We left behind Friday at 29.49. So there's a big gap there. Okay. So with a big gap, what do we get? We get a market that is not in agreement and is not in continuation of the auction that existed. If we're not in continuation of the auction that existed, what tends to happen, and nothing's for certain, what tends to happen is that more people have to make a move. So you either have to get into futures to hedge your options position. You know, if you were selling puts or something, you're going to have to get into futures to cover those, to become more delta neutral, and so on and so forth. So we expect more activity, and boy, do we have more activity overnight. 580,000 contracts have traded. That's about what we get on a light day during the equities market trading. Okay, so Friday we got scenario 3. We carry that over. So pretty bullish close to Friday. So this is absolutely positively catching a lot of people off guard. So here's what we got. We opened right at 29.1775, which was the high. We have an open drive down. We have a pullback through the mid, a push through the mid surprisingly. And then we have a continuation move. We have the pullback and we have a corrective move, an impulse up. Could not take out the impulse high until well into the European session. And what we have now is a profile that shows consensus. Where does it show consensus? We see that the operators in this market are finding consensus around 2,900 this morning. And so we're opening out of range, and we're opening right against the point of control of the overnight in what looks like a balanced profile on very, very high volume. It's the volume that's causing me to be on the edge of my seat today, and we'll see how that plays out as the market opens. Again, if you're trading a small account, today's one of those days where you either go to the micros. And by the way, if you're trading the micros for less than about 3 contracts and you're really trading with your with one hand behind your back, the reason to go to the micros is to trade multiple contracts so you can cover risk, get a target, and have a runner. And today's a good day for a runner because it's likely to revert or continue. We don't know which. We'll let the market tell us. If you're trading an opening range type of setup, very, very advisable today to sit out the first 15-20 minutes. There's likely to be OTF or higher time frame traders, people putting on big positions or taking them off right off the open. So it's likely to get very sloshy on the opening range. I highly advise that you study that very, very well and just make sure you understand what you're getting into. That's a trade that's been around for a long, long time. And there are factors in there that, if you don't take the context of the market or the narrative, it's really easy to get run over. Okay, I'm just telling you this for your own good, not to bash anything or anybody. Just remember, if you don't understand what the market is trying to achieve, you need to ask yourself these 3 key questions. What has the market done? What is it trying to do? How good of a job is it doing in getting there? Whatever it's trying to do. And those 3 questions are likely to answer the action-oriented question, which is what is most likely or what is probably going to happen next. And I'm using the words most likely and probably because guess what? It's always a guess. Okay? It's always a guess. I can't tell what the future holds, but I can lean on the tendency or the probability of that particular product to behave a certain way based on its history and my experience with it. So just be smart and don't dive in right away. And if you're trading a smaller account, in other words, if you're trading for less than about 50% of initial margin, you shouldn't be trading the ES per contract. You shouldn't be trading the ES. You should be trading the micros. Okay, they're active. The bid spread has been pretty tight. And check this out. This is the spread between the micros and the ES. So the formula here is ES minus the micros. And I'll show you in 1 minute because it's been running a bit. Here's the spread. And these are actual trades. This isn't just bid offer. These are actual trades. It is being kept to a maximum of 2 ticks difference. Most of the time, it's a tick apart. This is really incredibly tight for a new launch. If you don't understand this chart, it's simply the ES minus the micro prices on a tick-to-tick basis, and what it's doing is it's charting how the 2 are correlated, and you can see the point of control or the most common value is 0, which means that this product is trading in line. The MES is trading almost perfectly in line with the minis. And so this is really, it's been a tick spread on the product. I've been watching it through most of the session. Here it is on CT Bookmap. Okay, this is the product right here, and you can see the book is pretty tight. It's keeping a tick spread, and it's trading a fair amount. So let's remove these because this doesn't apply anymore. So you could see it's not just moving around, which was my biggest fear, is that the bid offer is going to move around with no trading, and it would trigger stops in some funky areas. This isn't the case. It is trading out really, really well. It's be smart. If you're trading less than $6,000 or so dollars per contract, you should not be in the ES anymore. You have no excuse. Okay, let's move on. I've run out of time. The market's about to open. So that was the review segment. If you have questions about how to trade this thing, I did a webinar on Futures.io, and it's on my Twitter feed, and you should take a look at that. What am I expecting for today? Man, I've really been talking too much today. What are we looking for today? Today, I'm looking for an open auction out of range. We're opening up against the overnight point of control. I'm looking for responsive buying, looking for this thing to push through and into 29.05, get tangled up. But ultimately, I'm looking for 29.15 to be retested today at a minimum. I'm looking for this to ride up to 29.15. This is a key area from we've hit it pretty good from above, and I'm expecting that it's likely to revert back from below. It's a big gap. I'm not expecting it to reach its closing price, although such things have happened. The secondary, I'm looking for it to push into the prior above the 2900, push into 2905, impulse down. If we see an impulse down, I'm looking for the overnight low to be taken out and for us to start walking ourselves towards 2850 below. This could really push lower, but again, this isn't the result of something. This is just news. It's posturing, it's politics. So there's a heavy expectation for a reversion up. Scenario 3, it tests down immediately down into 28.94, potentially 28.90, looking for an impulse up, and this will be the open test drive move, and it's likely to get tangled at the 15, but then continue to ride higher into 29.25, potentially 29.29 on the third scenario. So 2 reversion scenarios, 1 initiative scenario. I'm not expecting the market to be initiative. I'm expecting that this problem, this negotiation stumbling block, is likely to have happened to be temporary. Okay? So that's where we stand. Good luck today, and keep an eye on those micros when you're able to trade them live, and move to them if you're holding less than $6,000 per contract in the ES or so, ES and Q. And Dow, if you're holding less than that, you really should be in the MES or the micros. Good luck.